Why S&P 500 index funds are a great retirement investing strategy. Once you retire, you shouldn't just take all the money you have in savings and keep it in cash. Sure, doing so will protect you from losses, but it will also mean losing out on substantial growth you'll need to keep up with inflation. Rather, you'll want to keep your money invested. And while bonds are a safe bet for retirees, stocks are important too, since they typically generate much higher returns. But if the idea of buying and holding individual stocks throughout retirement seems overwhelming, there may be a better solution for you: index funds. Index funds are set up to match the performance of existing indexes. An S&P 500 index funds track, wait for it, the S&P 500 to emulate its performance. Now, to be clear, not every index fund tracks the S&P 500. But as a retiree, you might really benefit from S&P 500 index funds for these key reasons. They offer solid diversification. Having a diverse portfolio is important at all times. In retirement, even more so. The reason: if you're consistently withdrawing from savings, a hard hit to your portfolio at the wrong time could subject you to massive losses that you struggle to recover from. But you're less likely to take that hard hit if you're invested in a wide array of stocks. Here's another way to look at it. Imagine your portfolio consists of 10 stocks, and 3 get hammered back-to-back due to poor earnings. Suddenly, you're in trouble. But if you put your money into an S&P 500 index fund instead, guess what happens when 3 stocks within that index underperform? Chances are, not a whole lot. They come with low fees. Investment fees can eat away your returns, and when you're relying on your portfolio for retirement income, that's a bad thing. The upside of all index funds is that they charge notably low fees, known as expense ratios, making them an affordable alternative to actively managed mutual funds. But what you save on fees, you don't necessarily lose in terms of performance. While it's true that index funds aim to match the performance of the indexes they're tied to, not beat it, they often do better than actively managed funds. Case in point, in 2019, 71% of large-cap U.S. actively managed equity funds failed to match the performance of the S&P 500. They don't require a lot of monitoring or guesswork. Index funds make investing a relatively stress-free endeavor. And at a time in your life when you want to spend your days enjoying retirement rather than actively managing an investment portfolio, that's a good thing. When you put money into an S&P 500 index fund, there's not much to do other than set it and forget it. Set yourself up for a secure retirement. Generally speaking, index funds are a good bet for retirees, but if you want to narrow down your strategy even more, it could pay to focus on S&P 500 index funds, like the Vanguard 500 Index or the Vanguard S&P 500 ETF. That said, there's risk involved in S&P 500 index funds. When the broader market tanks, so do your investments. But the stock market has a strong history of rebounding from downturns, so if you load up on S&P 500 index funds, there's a good chance you'll come out ahead. Finally, none of this is to say that all of your stock investments should come in the form of S&P 500 index funds during retirement. There's absolutely nothing wrong with retaining individual stocks, especially those that pay dividends. But if you're not sure how to assemble a retirement portfolio, starting with S&P 500 index funds is a good way to go. The $17,166 Social Security bonus most retirees completely overlook. If you're like most Americans, you're a few years behind on your retirement savings, but a handful of little-known Social Security secrets could help ensure a boost in your retirement income. For example, one easy trick could pay you as much as $17,166 more each year. Once you learn how to maximize your Social Security benefits, we think you could retire confidently with the peace of mind we're all after. These 5 NASDAQ stocks are the ones to watch in 2021. 2020 has been a landmark year for stocks trading on the NASDAQ stock market. The NASDAQ composite has dramatically outpaced the gains of other major market benchmarks, showing the strength of the companies that call the NASDAQ home. As we head into 2021, the NASDAQ is fertile ground for rising stars in the stock market world. The entity in charge of overseeing which companies make up the prestigious NASDAQ 100 index recently announced that 6 brand new members would join the index effective Monday. DEC 21. One of them, American Electric Power, got the nod solely because it moved from the New York Stock Exchange to the NASDAQ earlier this year. However, the other 5 have posted huge gains in 2020 and look poised to continue their winning ways in 2021. Let's take a quick look at all 5 to see which have the most promise. Peloton Interactive. Peloton Interactive has been the high flyer of this group, with shares nearly quintupling in 2020. The at-home interactive exercise equipment maker has resonated with fitness fans for a while. but the COVID-19 pandemic really boosted demand for its stationary bikes and treadmills. Now, the company is in the enviable position of having more interested customers than it can keep up with from a supply chain standpoint. Okta? Shares of Okta are up 133% so far in 2020, and it's easy to see why. When your entire workforce has to move to the cloud because of restrictions on gathering at non-essential places of employment, you need the identity verification software platform that Okta provides to ensure that your vital proprietary information remains secure. That increased demand has shown up in revenue growth, with Okta's sales climbing 42% year-over-year in the third quarter. The biggest news from Okta is that big financial institutions are finally starting to get interested in the company's services. With banks typically being the last to sign on with new technology, that milestone is an important one for Okta and will provide another leg up for revenue in 2021 and beyond. Atlassian. Australia's Atlassian has climbed onto the workplace collaboration bandwagon, with numerous platform tools designed to help people work more effectively together. For instance, its Trello productivity software helps manage workflows from anywhere, streamlining production and ensuring on-time delivery and completion of projects. The rising need for help in collaborating remotely has been a big factor in Atlassian's stock doubling in 2020. Yet the company is still building up its product portfolio to include even more tools and has ambitious plans for greater international penetration in markets it hasn't yet tapped. With efforts like its in-house venture fund to help bolster new apps, Atlassian hopes to keep bringing in new subscribers and keep its growth at top speed. Match Group. Match Group is the company behind the popular mobile dating app Tinder, among other online dating services. With offline dating methods largely put on hold during 2020 due to the pandemic, Match's properties have done extremely well. The company has global scope, and recently, its international business has done even better than its domestic operations. Long-term trends favor online dating, so Match has an opportunity to keep growing well beyond 2021. Despite a more than 90% rise for the stock, Match Group has room to run higher in the coming year. Marvell Technology. Finally, Marvell Technology has been taking advantage of the upgrade cycle for new 5G wireless network technology. Marvell's semiconductors are designed to help its customers keep up with advances in technology in areas ranging from cloud computing to automotive and wireless solutions. And with the rollout of 5G, Marvell's products have been in high demand. That sent the stock up more than 80%. The $17,166 Social Security bonus most retirees completely overlook. If you're like most Americans, you're a few years behind on your retirement savings. But a handful of little-known Social Security secrets could help ensure a boost in your retirement income. For example, one easy trick could pay you as much as $17,166 more each year once you learn how to maximize your Social Security benefits.